let's talk about the de-dollarization. China is implementing a digital yuan in the effort to continue to speed up the de-dollarization that's going on worldwide. That is pretty significant.
Yeah, well, U.S. dollar, the share of U.S. dollar reserves as a global foreign currency or reserve currency has fallen to its lowest level this century ever. It's happening. The de-dollarization is real. And what the Chinese are doing, which is very interesting, and I believe this to be the rails that they're building for the BRICS, instead of antagonizing President Trump and the administration about really building the BRICS unit infrastructure, which is something we've talked about on your show for a while. And the unit is actually operational, as is the infrastructure beginning to mature. But what China has done, first and foremost, is, of course, they have their rails, if you will, which is the bridge technology, that is mBridge, that allows countries to trade central bank digital currencies amongst themselves on a platform that settles in 7 seconds outside of SWIFT interference at a 98% reduction in fees. They've already partnered up with the countries in Southeast Asia. Their acronym for this group is ASEAN, ASEAN. They represent China's largest trading partner by far. They're twice the population of the United States, about 800 million people, and represent 30% of global GDP. They are now settling across this settlement system, which the SWIFT doesn't mesh with. The interesting thing about it is, along with that, what China has done is begun to nationalize or internationalize their yuan by building a series of multi-jurisdictional vaults that belong to the Shanghai Metals Exchange. When metal is delivered out of China, it has to leave through Hong Kong. So the first vault that they built is in Hong Kong. It's done. So if, for example, China were to trade with Saudi Arabia for oil and they pay for it using their digital yuan over the bridge technology, which, again, SWIFT can't intervene, the Chinese or the Saudis can immediately take that digital yuan, send it back to the Shanghai Metals Exchange in Hong Kong, and stand for physical delivery of metal. In other words, if they don't want to hold the digital yuan, it is immediately convertible now into gold on the Shanghai Exchange. Wow. And deliverable. But now they're building more vaults. The next one, believe it or not, is under construction in, of all places, Saudi Arabia. And they plan on putting these vaults in multi-jurisdictions all throughout the Belt Road so that all of these countries can trade their own central bank currency without interference of the SWIFT system, settle immediately at a massive reduction in fees, not have to convert to dollars through U.S. intermediary banks, and at the cost and the time and going through the U.S. to bolster the U.S. hegemony. Instead, they can build their own monetary ecosystems, trade with one another, and settle imbalances in currency or trade in gold in all of these vaults.
That's
instead of having one vault like the Bank of England when Venezuela said, can we have our gold back? And they said, no, you can't. So in essence, it is creating an ecosystem where the gold settlement is more or less replacing the treasury, and the ability to trade, instead of using the dollar for settlement, they're using central bank digital currencies, which chips away at the settlement status, and using gold instead of treasuries chips away at the reserve status. Little by little, this is happening. And yeah, right now we're at the lowest amount of dollar participation or reserves in this century. So it is happening, to your point.
Well, in a lot of real ways, it's a new kind of warfare, right? But economic warfare is always going on, whether it becomes at this level, where is it? And everybody's always competing, right? Everybody's always doing economic warfare when they're businesses and stuff. But at what point does it become almost like real economic warfare? You know what I'm saying?
Well, once it's realized, then what is a slow trickle becomes a rush, and there's only so many that can make it out the door at once. This is something that by its very nature has to be slow and steady. And you're beginning to see it. And to me, it's less the dollar participation and more the treasury participation. And you're seeing countries around the world say, well, why would we hold treasuries with the fiscal responsibility of a country that's creating $1 trillion in debt every 100 days? a country that has thrown caution to the wind, and one that if you end up on the wrong side of their agenda, you too can be a victim, where they will kick you out of SWIFT and in some cases sanction and even confiscate, like
Yeah,
we
that
did
was
with
a big
Russia, their
mistake. Yeah.
treasuries. So this has precipitated this, and the way that we have been going around the world at war to, it seems, everyone with everyone in economic war through tariffs that in many cases are more like sanctions. I think that it's accelerating the de-dollarization quietly, not to, aggravate the administration, but nonetheless, self-preservation would dictate that this is a backdoor that these folks have to, I think, really accentuate and refine, and you can see it happening in real time.
It's incredible. Now, the fact that there's a vault in Saudi Arabia uh, is not a small thing because,
It's not completed yet, but it is under construction, or the plans are to get it under construction very, very
but
quickly.
that's not a small thing because the petrodollar just ended, what, a year and a half ago? I don't know, time is flying so fast, but that's extremely significant and it shows geopolitical alignment.
Yeah, and it shows that Saudi Arabia is straddling the line. While they haven't fully accepted the integration into BRICS, you look at the mBridge technology, which is the cross-border settlement system that allows these countries to trade free from the SWIFT intervention. The four original participants, along with the Bank of International Settlements Innovation Hub, were China, Hong Kong, Thailand, and the United Arab Emirates. The fifth full participant, Saudi Arabia. By their very actions, they are showing allegiance towards this new growing union while still placating and kowtowing to the U.S. administration so as to not, I think, cross those lines, at least yet, until the infrastructure perhaps is fully integrated, giving them the ability to do this. But, when they came out and said, look, we'll still take the dollar, to your point with the petrodollar deal, which was at the 50-year anniversary of the signing of the deal with Kissinger and the Saudis in 2023. Yeah, we'll still take dollars, but we're going to take other things too, like digital yuan, and that's something that they're already doing. So it's something that is increasing, certainly in terms of its participation with countries around the world. And you got to look at things kind of out of duality, in that, yes, Maduro was a narco guy, right? And we did build the infrastructure. We, being the U.S. oil companies and the British oil companies, did build the infrastructure in Venezuela. And when Maduro took over, the agreement we had went pear-shaped. So there is some precedent for, I guess, or rationale for their argument, but nonetheless, they have applied to the BRICS and want to sell their oil for yuan, and that didn't work out so well for Gaddafi and for Hussein either. Now, I'm not saying that was the primary goal here, but certainly securing what is otherwise known as the largest known verified deposit of oil in the world is something that shouldn't be overlooked.
Oh, for sure. The fact that Maduro was a bad guy and a dictator is a nice propaganda thing.
Right.
But we'll put up with a lot of dictator and a lot of bad guy when they're talking about world reserve, world's supply of oil, as long as they're working with us.
Well, it's interesting, too, that all of a sudden we've taken interest in protecting the Christians in Nigeria. And they should have done it a long time ago if that's what they were thinking, because they've been persecuted for quite some time in Nigeria. And now they're working in coordination with the Nigerian government to, drop bombs on ISIS in Nigeria. Well, what is Nigeria? The largest producer of oil in all of Africa, who has fully applied and been integrated into a junior or an observation member with the BRICS. So are they trying to, so did Venezuela. Are they they did what they did through force with Venezuela and maybe with a little bit of cooperation with Nigeria. Are they trying to push back against this formation of the BRICS by countries that are developing? You're not going to see them go and try and do this with Russia or with India or with China directly, but you're beginning to see things that maybe have dual meanings in what we are being told and what the true motivation truly is.
Well, money and the movement of money has a way of telling you what the true picture is, doesn't it?
That sure does. Follow the money, they always say.
It does. Okay, the other thing with China that they're doing for that's going to impact the de-dollarization and silver markets is they've changed the licensing agreements on like 60% of the supply of silver worldwide, which they control. What is going on there? And we're seeing huge silver increases. It has to be tied to some of those actions.
Yeah, well, let's go back to the end of 23. The European Union said silver is a critical mineral. That's what the EU did, largely missed. Everyone is focusing on what the Chinese said here in January, but let's continue the timeline. In November of this year, before they made that announcement, they said that they are now going to prioritize silver and exporting of it for domestic needs. And then the United States says, well, but it is now a critical mineral here in the U.S., which is huge, putting a policy floor, a national security floor, if you will, underneath the price of silver. And then China comes out and says, well, we are going to restrict silver exports. And to your point, in terms of doré refining, doré being bars that are crudely refined by miners who then send them somewhere to be fully refined. Well, a lot of that silver all around the world in doré form found its way to China, who, to your point, does refine between 60 and 70% of all the world's doré, which then they refine into pure silver. They said, yeah, we're going to restrict to only state-sponsored refineries. There were hundreds of smaller and mid-sized refiners that would send their metal out into the Western market that now do not meet the qualifications. And if they are state-sponsored and have to get a permit through Beijing, knowing that in November they said exports will be really rethought and prioritized to domestic needs, and we're going to restrict them, and you must get permitted first, along with silver being classified strategic in the European Union and the United States, you can see that this is happening. Now, I've said on your show for quite some time that I have friends in the mining industry, Sean Kuhn and for Dolly Varden in particular, and Keith Neumeyer for First Majestic, who have said that that Chinese, who are the number 2 largest producer in the world, are flying around Latin America for years buying pre-refined silver from the mines themselves. In other words, doré and concentrate, which is a byproduct of the mining process, shipping it back to China and refining it themselves so that the market has no idea how much they are buying and it doesn't have an effect on the price. But they've been doing that for years. Now, this is the number 2 producer in the world that finds it necessary to fly halfway across the world and buy unrefined silver in pre-refined stages, sending it back and doing it themselves. You can see that this is something that they understand. And then taking a lesson from the Chinese was Samsung, who a few weeks ago flew to Mexico, struck a deal with a closed mine, said, open it again, and we get 100% of all of your concentrate that you produce for the next 2 years for our needs. And then you look at what's happening on COMEX. And this is something that must be understood, because to me, Sarah, there is very little else that people who own silver need to understand about what's happening with silver than to look at the deliveries, okay? This is the most important thing to understand as far as I am concerned, period. And so if we talk, let's go back a month and talk about December. The December delivery notices were at 12,575 contracts. It's the largest all-time high record for a month of December on COMEX. 12,575 times 5,000 ounces per contract is 62,875,000 ounces were delivered in December. Now, when it gets delivered, that means someone said, I don't want a paper promise, I want the real metal. Now, that doesn't all leave COMEX. A lot of it goes into the COMEX in what is called eligible. Registered are the bars that you can stand for delivery on inside the system backing the contracts. Eligible means, you know what, it's here, it's ours, it's in the vault, we're not moving it, it's not for sale, thank you very much. But the question is, who the hell is standing for possession for 63 million ounces of silver? A 500 ounce box of Silver Eagles weighs 42 pounds. What do you think 63 million ounces weighs? And who's doing it? And where is the journalistic integrity across the entire mainstream asking this question, because it's happened for 13 straight months now? Since Trump won the election, every single month, it's record after record after record after record. billions and billions and billions and billions of dollars worth of gold and silver every single month. Well, let's look at what's happened in the first 6 days of January. In the first 6 days of January, the first 6 delivery days of the January contract, there have already been 5,451 gold contracts that have stood for delivery at 100 ounces apiece, plus 6,321 silver contracts that stood for delivery. That is 545,100 ounces of gold and another 31,605,000 ounces of silver. Who's doing this? That's billions and billions here, 6 days into the month with another 24 yet to go.
It's
and there's no one
isn't it?
asking.
No,
Yes,
well, they
it
should
is.
be asking. You know what? The BRICS nations, which control over 50% of all the silver or of the gold reserves, are standing for delivery. That's the headline I've been looking at and information. What are they doing? Because it seems like there's almost full-blown economic warfare. Before we get into that, though, I want to ask you, do you think that China's licensing and what they're doing, shutting down these mines, is that essentially their response to Trump's tariffs? And is this the low-level economic war that we're seeing? It's not even low level. It's in our face.
Yeah, and so people, the lag time that this has taken, I've been talking about since 2020, and a lot of people dismiss it because it takes so long. Well, if that were true, Andy, why don't they just buy everything? Because if they came in with $1 trillion to buy everything, just like that, they'd cut off their nose to spite their face, would blow everything up. Everyone would become protectionist. No one, what do they want this for? The price would spike. No one would sell. Instead, they've been very slowly, quietly, not only buying it from every exchange across the globe that doesn't reflect the price mechanism in New York, but probably even shorting it in New York to drive down the paper price, buying it at subsidized prices around the globe, and then putting it lately at least a $5 higher price in Beijing, incentivizing all of the traders in the West to buy paper in the West and deliver physical in China and capture that spread, that arbitrage, and that metal never comes
That's undermining
back.
us, right? I mean, because they're convincing us to buy paper while they're getting the physical. That is a big mistake.
Of course, and when you ask yourself, who is standing for delivery to this kind of volume? It's central banks, it's sovereign wealth funds, it's commercial banks, it's Tesla, it's Samsung, it's Sony. It's the biggest companies in the world and the biggest banks and the biggest central banks. These people forget about the wealth. How about the information? They're closest to the information. They do not spend billions upon billions upon billions upon billions right in your face with no media attention, which really makes it interesting, for the hell of it. They know the playbook. And when you're at that level of wealth, you're at that level of information and knowledge, which is worth more than the money backing it. And these metals are being proven to be worth more than the dollars paying for it. And when you see all of these banks that are, in essence, internalizing physical silver exposure by owning it rather than leaving it floating in the exchange ecosystem, it should really wake people up. And that is one of the old sayings about gold and silver that Doug Casey made famous, and that is gold and silver are 5,000, 6,000-year-old assets that are simultaneously no one else's liability. There's no counterparty risk. And that's a big deal when you look at the behavior of the biggest money in the world, suggesting that they're prioritizing physical possession and removal of counterparty risk over anything else.